We've got an earnings alert on Starbucks. It is wrapping up the earnings call. The stock is rallying after hours. Kate Rogers back at headquarters to tell us what CEO Kevin Johnson had to say. Hey, Kate.
Hey there, Melissa. The coffee giant out with beats on the top and bottom lines for Q1. Same-store sales increasing by 4% globally, also 4% in the U.S. for the second quarter in a row, and 1% in the very important market of China. CEO Kevin Johnson said the company continues to execute on its strategic priorities. Take a listen.
We shared with you our strategy to streamline the business, drive growth in the key markets of U.S. and China, expand our global reach through the Global Coffee Alliance, while simultaneously returning significant capital to our shareholders. This strategy is working, as evidenced by our Q1 results, and we remain confident in the longer-term outlook for the business.
Johnson also said on China, the company will continue to learn and adapt as it creates a broader coffee culture, expands its presence in new and existing cities there. And as you can see right now, the stock is higher by around 2%, guys. Back over to you.
So just quickly, Kate, has the company basically put to bed concerns about the slowdown in China?
Yeah, that's what we seem to be hearing. I also had a quick phone call with John Culver, the group president for International. He says, we've proved that we're able to perform in this rapidly evolving, consumer and retail environment. So they don't seem to be pulling back on any plans or expressing any concerns right now, Melissa.
All right, Kate, thank you. Kate Rogers back at headquarters on Starbucks here. You like it?
Actually, yeah. I mean, you've had about a 2 or 3 year kind of basing period or consolidation period that we've broken out. We were concerned when Schultz left that maybe perhaps the company wasn't going to be able to grow and adapt like they are. But the fact that they're saying they're seeing some growth in China, the fact that they're seeing some growth in the rest of the company, I actually do like it quite a bit here.
Yeah, I mean, given those comps here in the U.S., and if they're not as downbeat as you might expect them to about China, then this is obviously one that should be a slingshot on the way back up, especially how it's shown great relative strength over the last few months with market volatility here.
It's not like it's super cheap, though, right? I mean, it should have a premium multiple, does have a premium multiple. I don't know. I mean, it's a great company, but it's not overly, it's fine. I think it's just fine. Its multiple's a little high. There's yield. That's not enough to make me want to, but it's okay.
Yeah, it'll run into trouble. The all-time high was 70-ish, and obviously it reminds me a lot of what's going on with Nike, by the way. It sold off, coming back now in the face of a lot of bad news. But to your point about comps, global comps up 4% when the street was looking for up 2.9 with margins hanging in there. Yeah. It's a pretty good story. So maybe it does take another run at that 70 level that BK is talking about.